You're listening to a MindWeb podcast. Hello and welcome to this MindWeb.com Newsmaker podcast. It's Thursday, the 29th of September, and joining me on the line is Natalie Dempster. She's the Director of Government Affairs at the World Gold Council. Natalie, earlier this week saw the end of the second year of the third central bank gold agreement. Under the agreement, the various central bank signatories are allowed collectively to sell as much as but no more than 400 tons of gold. In this latest year, they sold 1.1 tons. What's changed since the end of the CBGA3 and now?
You're right. We have seen an incredible slowdown in sales by European central banks. Really, since the height of the crisis, since Lehman's, it's been slowing. And I think there's been a couple of factors. One is that I think a good deal of the desired rebalancing has probably now occurred, because don't forget that European central banks have been very heavy sellers for years and years in the region of 400 to 500 tons, really whatever the agreement would allow. But it also reflects current economic conditions. The proceeds from those gold sales were being reinvested in fixed income assets, mainly dollar denominated due to the size of the US debt market. However, with the onset of the financial crisis, that trade became a lot less attractive. The Fed's policy of quantitative easing, while necessary, clearly raises concerns about the future value of the dollar and therefore the value of dollar denominated assets.
What are we likely then to see throughout the rest of the CBGA3?
I think that we will see a continual hiatus in sales of European central banks, and I think we will also see continued buying from emerging market central banks, because that's been the other very big trend over the past couple of years.
And I suppose perhaps if we go back a little bit in time and sort of look at the reasons for the original central bank agreements, what was you talked about a rebalancing. Perhaps if you could expand a little bit on that and sort of from there where we're sitting now in terms of that rebalancing.
For the European central banks or for the emerging markets?
Well, I suppose from the European central banks to the emerging markets.
Yes, well, the distribution of gold within central banks is really very different. European central banks held very big legacy stocks of gold from the gold standard days. So they could have 40, 50, 60% of their reserves in gold. And they've been heavy sellers since the breakdown of Bretton Woods, as with the international monetary system no longer linked to gold, it became unnecessary to hold such large gold stocks. Since the agreement began in September 1999, European central banks have sold between 400 and 500 tons of gold a year. So a good deal of rebalancing has taken place. On the opposite side, emerging market country central banks hold a much smaller proportion of gold in reserves. Rebalancing has been important there too, because what we've seen is a combination of very rapid foreign exchange accumulation and stagnant gold holdings has meant that gold's share in emerging market economies' reserves has dropped really very sharply in some countries. So emerging market central banks have had to buy a lot of gold just to get back to where they were 5 or 10 years ago.
Do you see a return to purchasing on behalf of the European central banks, or are we now at a point where they've got enough gold, they're just not going to be selling any more of it?
I think purchasing will remain focused with emerging market central banks. European central banks still hold a relatively large proportion of gold in their reserves. Emerging market countries, it's much, much lower. And I think that's where we will see the continued buying.
And in terms of the manner in which these central banks are going about it, we have seen some. I'm thinking now of the likes of Venezuela, where they decided, well, we're just going to nationalize the gold sector. We do see a lot of buying or sort of a lot of gold suddenly appearing in the Chinese numbers. They tend to be a little bit more coy in terms of how they work their central bank gold buying. How are there? What sorts of ways are we likely to see? Is this a trend that we're going to see carrying on in various other emerging markets, do you think?
Well, central banks have a couple of options. They can, of course, buy their local mine production, or they can buy their local recycled gold. I believe that has been the case in China. But also the gold market is incredibly deep and liquid, meaning that, central banks can simply go into the global over-the-counter market and purchase gold that way. A recent survey by the London Bullion Market Association highlighted just how deep and liquid the gold market is. It did a survey of its market-making members in the first quarter of this year, and they estimated that the gold market settled via London alone trades in the region of 240 billion a day. That's enormous, even compared to government debt markets, and it means that it's sufficiently deep and liquid for central banks to be able to transact in that manner.
Natalie, just two final questions to close off with. Are we likely to see a fourth central bank gold agreement? And if so, would it perhaps encompass more of the emerging markets as well, and perhaps include a purchasing agreement as well as a selling one?
I think that is unlikely. Whether or not we will see a fourth central bank gold agreement, I think we'll just need to wait and see. I think it would always be a sales agreement, so it's probably a little bit early in the process to be discussing that, because of course we've still got 3 years left of the existing agreement. It doesn't actually finish until September the 26th of 2014, so we've got a good while yet.
And just finally, there has been a lot of talk about, especially within the gold market, about perhaps a move to or a return to a gold standard. There have been lots of people against it as well as for it. And of course, there's been a lot of talk about collateralization as well. And perhaps in the case of Greece, for example, putting up some of their gold as collateral for loans. Are we likely to see gold's role in the financial system taking on a different aspect to what perhaps it has been in the past?
I don't think in any of the ways that you suggest, but we are seeing gold's role in the system change, and that is that, after being really very large net sellers of gold for decades, we're now back to the situation where, as a whole, central banks are net purchasers. They bought in the region of 80 tons last year. So far this year, they bought over 200 tons. So I think gold's role in the reserve asset management system is growing, and it will continue to do so.
Natalie Dempster is the Director of Government Affairs at the World Gold Council. And that's it for this MindWeb.com Newsmaker podcast. From me, Jeff Candy, thanks for listening, and please join us again.